Welcome, everybody, to another episode of Amplify Your Business. Today, we're going to be talking all about Bitcoin, how you have to buy lots of Bitcoin. That's the only way you're going to secure your future. Actually, no, that's not the case. We're not talking about that. And at the timing, this is a joke because at the timing right now that we're recording this, so it's July 2022, Bitcoin and the rest of the cryptocurrencies have been struggling a little bit. But today we have a financial advisor, somebody who's going to really help people with their wealth and works with a lot of entrepreneurs. And so welcome to the show, Julie Shipley-Strickland. She is the senior wealth advisor with Wellington-Altus Private Wealth and the owner of JSS Wealth and Risk Management. Thanks a lot for joining us, Julie.
Thanks, Lance. And what an opening. I love it. Crypto, let's do it.
Well, that has been kind of an interesting roller coaster, right? In particular, just recently. I mean, all the markets have been in such a crazy flux right now. And so you're dealing with this on a daily basis as you're working with people trying to figure out, how do I manage my wealth? How do I, balance out some of those risks in the portfolio? So does, big fluctuations in markets right now, does that create like a whole pile of extra work and stress for you? Or does it actually make your life a little bit easier because now people are coming to you wanting to have those conversations?
It's that's an interesting question. I love it. It definitely doesn't make it easier for sure, because although clients are educated and we work through clients, we do a lot of long-term planning with their goals. They know that there's going to be blips in the market. It's very different when they open a statement or look online and then they see the negative, right?
Yeah.
And so I think it's about putting it in context. I think education is key. So, we knew that the first half of this year was going to be pretty bumpy. So when I met with clients beginning of the year, gave them a heads up, educated them what's going on. My newsletters that come out really try and educate clients on understanding why the market is reacting the way it is, and what we can do to mitigate it and what we are doing to mitigate it. I would say, yes, definitely having a lot of conversations with clients, but they aren't upset, frustrated. They're more saying, hey, Julie, I'd like information. I don't understand what's happened now. Can we have a 30-minute conversation to understand? So it's clients aren't surprised, but they want to understand, which I personally love doing. And I think it's great.
Yeah, well, a big part of your practice is really trying to educate people. We were just talking about that before we hit the record button, and we'll probably get into that a little bit more. So yeah, I can see why you're kind of excited that it creates those opportunities to have those conversations and really guide them. Now, one of the things, just again, very timely, what's going on with the oil and gas industry. You're in Calgary, and so the heart of Alberta's oil and gas corporate offices. And so with the price of oil as high as it is right now, that must make your job really easy, because I'd imagine you have people that just are backing up dump trucks full of cash up to your door and saying, hey, yes, can you just put this somewhere because I've run out of room in my mattress?
Yeah, I mean, that's exactly what's happening. Yeah. So I mean, right after this call, we're gonna go do that. Yeah. Not quite, not yet. For us, investing in energy has been something that we've been doing since probably, I think we bought our first positions April of 2020. So I mean, energy's really been out of favor from 2014 to 2020. We really struggled in that space, finding something that clients could invest in, and frankly, with lack of investment going in the energy industry, it was really hard to put that sector of the economy into clients' portfolios. But April of 2020, the barrel hit $0 for a little while there. So it seemed like a really good buying opportunity when you looked at what was going on in the market. And so not to say that that's already run its course. I do think there's areas in that sector where there's definitely still opportunity. But I think at this point, we've had a very good run in that sector. So to see a pullback is not something we were surprised in or anything really worrisome in our minds. So it's been good.
It's been really interesting in that industry, right? Because I mean, talk about volatility. We've always had that within the oil and gas industry, but not to this extreme where it goes, like you said, from zero to, well, what is it at now? What was the peak here that it got to?
I believe it was, over 130 at one point, 125. Yeah. So it keeps fluctuating. Volatility is the name of the game with the barrel, that's for sure.
Yeah. And there's people saying it's going to be over 200 without a doubt. So, I mean, who knows, right?
Oh yeah. But, I've got economists way over 250. I think I read one a couple of weeks ago, reputable firm in the US, was like, it'll hit 300. It's like,
Yeah.
I don't know about that. Let's see. So
yeah. Yeah. So enough kidding and stuff aside, I would love to hear your background and how you got into this business. Then, how did you start your wealth and risk management business? What's your entrepreneurial journey, I guess?
I love it. Thank you. I started in 2008, August of 2008. And for the listeners, I'm not sure if everyone remembers, but that was the beginning of the global financial crisis. So to start in the finance industry was really interesting. But yeah, started on the insurance side. So the risk side of the business with London Life and Freedom 55. Reason I started there, my dad had been with them since 1976. So he was out of Montreal. That's where I'm from. Go Habs, go! Rebuilding season. Okay, enough on that. We're going forward. Rebuilding season. And so I started then, and I did have a bit of an investment practice, but really my focus was the insurance side of the business at the time. And then it grew. My dad unfortunately passed away in 2012 from Lou Gehrig's disease, or ALS as it's commonly known. And so I took over part of his practice with one of my brothers. And so that was a great learning curve. I think one of the biggest things I've learned from working with some of my dad's clients was they were, of course, my father's age in and around. And so when I was planning for younger clients, I could see what the concerns were firsthand 30, 40 years out, which was really helpful in guiding some of my younger clients. And I also really broke into the retirement income business pretty early and really liked it. So pretty early in my career. So that part was really interesting. And that's not where a lot of advisors focus their business, is retirement income. And so that caused me to kind of come over to the investment side. And I joined a good friend of my dad's, his business was in Calgary. And so I joined in 2014. And then in 2018, he unfortunately passed away as well from a brain tumor, glioblastoma. So, after that, it took some time. Really wanted to step more into that investment business. So joined Wellington-Altus Private Wealth in January of 2019, and then rebranded in 2020 to the JSS Wealth and Risk Management. So it's been an awesome journey. My business is very balanced between the two. I do a lot of insurance work and a lot of investment work. And I love both sides of the business. I think they really are important, especially to entrepreneurs. And then their families, right? I think it's really important to make sure you can grow your wealth, not have all your eggs in one basket, as entrepreneurs love reinvesting back in their business. But then they also need to be protected along their entrepreneurial journey. So I think it's really important to have both.
Yeah. And now I'd love to have you talk a little bit about being an entrepreneur in an industry that you really don't have a lot of control over the volatility of what is happening within your business, right? So a lot of other businesses, are reliant on different things. There are these external forces that really dictate what is happening within the business, but not, I think, to the same degree that you as an advisor, as somebody who's helping people determine what stocks to invest in or what funds to really explore. Those market swings can be just so dramatic that their performance largely is outside of your control. I mean, you're going to try to beat the market, I'd imagine. And so that's how a lot of them are trying to evaluate you, but it's still, you're along for the ride in a lot of respect as well. So talk to me a little bit about that in terms of the entrepreneurial experience that you have and how that might contrast against what you perceive other people's entrepreneurial experiences might be as well.
Yeah, I love that. That's a good question. I think for me, beating the market is definitely something that's well known in my industry, right? That's what your advisor is trying to do for you, is beat the market. The catch is these markets are all, what am I comparing it to, right? These markets are one, out of our control in a lot of realms, but two, if you're comparing certain stocks or a certain ETF to a market, that's a bit of an arbitrary comparison. Right. So the way I like to look at it is, sit down with clients and figure out their goals. What are your 3 to 5 year goals? What are your short-term goals? What are your 15, 20, 30-year goals? And let's work towards your goals and let's align your investments with those goals. Mm-hmm. It's not so much that we need to necessarily hit a certain number all the time. And really, when clients are in their 20s, 30s, even 40s, it's just the act of saving and putting money aside that we want to focus on. It's getting into that habit and that routine, not necessarily getting a certain rate of return. Several articles have been, published and that sort of thing on the importance of consistently putting money aside. And that time is one of your biggest factors to retirement and or growing your wealth, as opposed to necessarily getting this X rate of return that we're targeting. That being said, nobody wants minus 20 every year either. That wouldn't work out well either. So I think it's also big on education. One, for myself, I do a lot of reading, a lot of podcast listening, a lot of tons of suppliers that we work with. So I get a lot of information into not predicting the market, but being able to say, hey, this is what I think might happen in the next 3 to 6 months. And so that we can position clients' portfolios so that they're in the best position to be able to react to what we think is going to happen. So I'll give you an example. Last fall, there was obviously a lot of talk in the media and a lot about interest rates rising, right? This was not something that any of us were going to be surprised about if interest rates, right? So we would obviously position our portfolios for rising interest rates, right? So whether the interest rates rose in January or March or June, it's probably not going to make or break, but to ensure that the client is set up for rising interest rates was kind of more of our focus, if that gives you kind of a bit of an indication.
Yeah.
In terms of other entrepreneurs, it's fun you asked that, because I'm part of a female entrepreneur group in Calgary, and we're all in different industries. And then I am part of Grow EO, so that's an entrepreneurs organization as well. And so I meet with a lot of entrepreneurs and very learn from them. But what's really interesting is that every entrepreneur has their challenge. So while mine might be the market, somebody else is a supplier overseas, or somebody else is, a part that they can't get, or, supply chain really didn't affect my industry, whereas it's affected so many industries over the past 2 years, right? So I think the key is, yes, as an entrepreneur, we all have our own challenges, but then we all have similar challenges. Right? We all have HR, we all have payroll, we all have, humans that we want to keep happy, that are part of our team, that we want to grow, so how are you always supporting and navigating those challenges? And I think that's just part of the entrepreneurial journey, but I think that's something that every entrepreneur has in common.
Yeah, for sure. So now, with the breadth of, knowledge and the experience that you've had working with entrepreneurs, how do you approach their investment or the advice that you'd be giving for them in terms of investment, which might be different than somebody who isn't an entrepreneur, doesn't have a business?
Yeah, no, great question. So I think one with entrepreneurs is getting them in a mindset of saving, right? And, as an entrepreneur, when you're starting out, you're grinding. Like, you are just trying to pay your bills. You're trying to, do I hire staff? Do I not? Do I expand? Do I grow? Do I take this supplier on? What do I do? Like, there's so much in the business that when the business starts to generate revenue and things start to do well, it's hard to step out and say, hey, I'm going to actually pay myself a reasonable salary or dividends or whatnot, and I'm actually going to start saving for my retirement, or when I sell the business, or further down the road. And so I think it's about educating them and getting them into that mindset first, because nobody's going to save or put money aside if they don't realize the importance of it. So that's one piece to start. And entrepreneurs have, a different advantage to, let's say, employees, right? They have a corporation that they can structure. You can put investments within your corporation and have a bit of favorable tax benefits in there. You can have a holding company. You can structure different companies. And you can also put some of your risk management in there. So some of your insurance. So that leads into kind of number 2, is that while entrepreneurs are along this journey, their biggest asset is themselves, right? Mm-hmm. If something happens to them, they can't grow the business. And so that's a big part of educating entrepreneurs, saying, hey, what if you get sick? What if you get disabled? Like, how is this business running? And, or how are you selling this business? And so what does that look like? And walking through that with entrepreneurs, 1, really gives them peace of mind once we've set things up. And 2, I think it gives them more freedom, because they know, 1, their family's taken care of, 2, their employees are taken care of should anything, happen to them. Yeah. We don't want the business to go, if a business is valued at a couple $1 million, we don't want it going down the tubes because the owner's got cancer, right? We want to maintain that value of the business. So what positions need to be structured within the business? What money needs to come into the business to sustain that if the business owner wants to sell or that sort of thing. So those are kind of the discussions I get to have with entrepreneurs. And I love it.
Yeah.
I love it.
Well, and I mean, one of the big things in investing is making sure that you diversify your investments as well, right? And so as entrepreneurs, oftentimes, I think we get into this mindset that we need to keep reinvesting into our business and not taking some of our resources out and putting them into other types of investments, because we oftentimes, especially if we're in a growth mode for our business, our return that we're going to be potentially going to be making off of that business as we grow it could be, quite substantial compared to the return that we expect off of some other forms of investment. And we know the business too, like if you take the Buffett approach where it's only invest in things that and know really well, then you kind of lean a little bit more to putting more of those eggs into the basket of your business as opposed to elsewhere. That it creates some risk, right? Because you're not diversifying. How do you balance that with your entrepreneur clients?
So you've totally got that for sure, because that's exactly the conversations that I feel like I have so often. Yeah. I think one of the things is back to education, right? Yes, your business. Yes, your business will make 20, 30, 40, 80% rate of return, whatever you believe it's going to make. But at the same time, what if something happens? There's this thing called COVID that happened a couple of years ago. I'm sure everyone's heard of it. Right? And businesses were shut down. Well, all of a sudden your business is not making 20, 30, 40%. It's losing money, right? So my entrepreneurs that had large pools of savings could draw on those. So there's back to the, we don't always have control over everything, right? And we can't have all of our eggs in one basket. Because I actually don't think that's smart, one, investing, but two, I don't think that's actually smart for your business. I think you're putting your business hugely at risk not to have a bit of a safety net somewhere else on both the investment side, but also the risk side, right? It's not fair to your employees if you don't have a plan in place, if God forbid you get cancer.
Yeah.
And you will probably recover from cancer, right? Like you will probably beat that and move forward. Absolutely. What's happening in the interim? What's the plan? What's the job security? And a lot of entrepreneurs, this is becoming more and more important to them, which is amazing, right? Because they say, look, these employees have helped me build this business to where it's at right now. I want to make sure not only my business being protected, their jobs, their families are protected. How can I do that? So I think it's about getting the entrepreneur to that level where they're really seeing their business as a whole entity, and that really is their job to protect it. And I think once entrepreneurs enter that mindset, they're very comfortable starting to diversify their assets because they see it in a different way. They see it as actually protecting their business.
Yeah.
The other thing is just like building a portfolio. If you think of a pie, slice of pie, you're not putting 100% of that pie in high risk when you're building a portfolio, right? No matter what kind of investor you are. You're also not probably putting 100% low risk because we've had really low interest rates for the past decade. So low risk hasn't had a great rate of return. So if you factor in things like inflationary risk, which we've heard lots about, that's not a smart move either. So we're diversifying when we're building our portfolio. Why wouldn't we be diversifying an entrepreneur's assets, right? Mm-hmm. And so having some, that are making lower rates of return than what their business can, but it's there for a different purpose. It's not meant to make the same rate of return as their business. It's meant to be a safety net, protection, there just in case, that sort of mindset.
Yeah. And I think it's really important for us entrepreneurs to hear that, because I think it is really, really easy to just get focused on, well, this is my retirement plan, my business when I sell it, right? As opposed to really thinking through, okay, well, maybe there's some extra risk that I'm taking on because of putting all those that emphasis on that. Now, one thing that I'm also curious about, you did mention a little bit about before about investing or buying investments within your business, as opposed to always doing it just from a personal standpoint. And so you said that there were some tax incentives sometimes for that. Mm-hmm. Can you walk us through a little bit more or go a little bit deeper into some of the advice that you give some entrepreneurs in that area? Because I think that there's a lot of entrepreneurs that doesn't even occur to them that they could be using keeping some of that equity within the company and then allowing the company to make some of those investments.
Yeah, no, you're exactly right. So I think we'll preface it by, for sure, this needs to be talked to on everyone's individual situation, right? Everyone's different. But if you're, if you have an operating company that's running your business, you can choose, you need to be careful with tax planning and liability, but you can choose to leave some of the retained earnings within the business and then set up an investment account that is technically owned by the business, obviously operated by the owner, but owned by the business. And so that allows a few things. One, that money doesn't need to be distributed out to the owner and paid at a personal tax rate, either the dividend tax rate or, T4 salaried income. Okay. It's obviously much more favorable for it to stay in the business. The tax rates are substantially lower. And if the business owner is not using all of the money that they're generating within the business, why would they take it out and pay that tax? So leaving it in there. And it's a great way to diversify their investments. Let's say they have some TFSA or RSP or non-registered in their personal names, and then they have this corporate investment account. And so clients like that a lot. It's easy. It's within the corporation. And it almost feels like you're reinvesting back in your business because frankly, the business owns the investment. On the flip side, you have to be careful. You have to be careful because it is an asset of the business. So there's liability there. So you need to make sure we set it up properly with, legal and that sort of thing. And you need to make sure that any growth that's happening within the corporation, within those investments within the corporation, you be careful with certain rules with CRA and some tax planning around that. So it can be very favorable. And it's something I do with a lot of business owners. The last part is, of course, your insurance can be held within your business. And so that's an interesting concept where, your business pays some of the insurance premiums, because we all know how much we all love paying for insurance. So if the business can pay for it again with after-tax dollars, a little more favorable than paying it personally. Again, you need to warrant it for your situation, right? So should something happen to you, the business receives the funds. That might be exactly what you want, right? You might need the money to come into the business. So that might be set up perfectly. If you need it to come out to your family, there's different ways we can unlock it. There's something called the capital dividend account, and that can draw certain insurance proceeds out. So it's definitely one of those things that can work extremely, extremely well for entrepreneurs. It's something every entrepreneur should look into and see if it works for them. And you can do it with an operating company, and then you can also do it with a holding company, depending on the structure of your business. So lots of flexibility, lots of advantages, something I would really strongly encourage every entrepreneur really dig into and see if it's a fit for them, because it can be very fruitful.
Yeah. And thanks for bringing up the insurance part again, with holding that within the company. That's something that I do. And I don't know how many of my peers maybe are doing that, but the critical illness insurance, because you've mentioned that a few times with regard to, well, what happens if you get sick, if you catch, you get diagnosed with cancer, and you might survive it. And odds are getting better and better all the time that you will.
100%.
But the business might not. And so if you're pulled out of that business and you're playing such a critical role, how do you replace yourself while you're recovering. That, right? Like that's a tricky thing. And so, so that's something that I've invested in, or the company is invested in through an insurance policy there. But very interesting stuff. Now, one thing that I'm also curious about too is, as the company, like we talked about, a high growth company, that return that they're going to be getting out of their business is going to be really attractive in terms of pulling most of their resources maybe into that. And that's not going to diversify things very well. So that might be a mistake. I'm curious about at the end of one's entrepreneurial journey, where they're looking at maybe winding down the company or selling the company, actually more so, hopefully. In that situation, how does your strategy start to shift? And I mean, in general terms, obviously, because everybody's personal situations are different, but the strategy is going to shift, I would imagine, somewhat based off of the stage in which the company is in and that entrepreneur's exit plan.
Yeah, you've got it. And so that's where I was saying, it might start out in an operating company as certain investments and then might shift to a holding company because the operating company is going to be sold, right?
Mm-hmm.
And of course, you're not going to sell your retirement assets. So there's strategies like that. There's certain entrepreneurs who own the shares of their operating company because of the lifetime capital gains exemption. Of course, when they sell, they don't want to pay capital gains tax. There's split dollar ownership where they own part of it and then the rest is owned by a holding company. So there's different, depending on, of course, the entrepreneurs, goals if they're selling and how they're selling. Right? Are you selling? Are you selling a client list? Are you selling assets of the business? Are you doing a share sale? How are you going to eventually sell your business down the road? It's an important factor to consider. So it's something that when we start out, we typically are starting out small with entrepreneurs and we can often put it in the operating company, but it's a discussion we need to have with their legal team and their accountants to ensure that, at some point there's maybe some movement and changes within this investment situation and to the insurance. Right? You might start off with this operating company owning it, but then, you sell the business 10 years in and the entrepreneur may say, hey, I still want that critical illness policy, right? So now we've got to change ownership from that operating company to, let's say, a holding company that they're going to own. So it's definitely something we talk about from day one. How's the business going to be sold? What's your timeline? Because most entrepreneurs have an idea. Julie, I'm going to be in this for 25 years, or Julie, I'm going to be in this for 2 to 5. Right?
Yeah.
They've got a bit of an idea. And while things can change, entrepreneurs have a good sense of that. So I think we start the discussions at the beginning, but there's lots of flexibility with these sorts of strategies in order to be able to really suit whatever the entrepreneur really wants down the line. And as long as we confer with, legal, tax, accounting, we can make sure that it's structured in the most favorable way for the entrepreneur.
Yeah. Makes sense.
Yeah.
Okay,
Yeah.
so we are in the middle of the stampede down in Calgary right now. You said there's a party going outside the window, so I'm going to have a little bit of fun with you. And I have to say, I am disappointed you didn't have your cowboy hat on at all. Or you probably are wearing boots though? No?
I'm taking a break day. As a veteran of the Stampede, I've gone to, 14 of them or something like that. You can't wear the boots all 10 days in a row and you'll get hat hair and there's, there's things, there's consideration, Lance. There's consideration.
Totally. Well, this is the problem with me in hats now when I don't have any hair on is I get this red line across, right? So it's always one of those things where it's like, it's worse, I think, than hat hair because I've pulled that off and it's just this band of red. But anyway.
I would have many women that would not agree with you on that one. Let's see.
Okay, so let's have a little bit of fun. So let's do something we never ever do, but because it's the Stampede and you're somebody who likes to have fun, we've been joking around right from the very beginning. So let's do some word association. Okay, so I'm going to throw out some Calgary Stampede terms. Okay, and these I didn't write this down. This is not pre-planned out.
No,
so
I have no
sure
idea
exactly where this is going to go. So I'm going to throw out some terms, and then you just immediately the first thing that comes to mind.
Okay,
ready?
It's gonna be awesome. I can't wait.
Okay, pancakes.
Syrup.
Okay, and for those who are listening to this from abroad who don't understand what pancakes mean to the Calgary Stampede, this is like a staple event. Mm-hmm. So many corporate companies are out there flipping pancakes and having free pancake breakfasts.
Free pancake breakfasts. See, I can't even say it. But also, I say syrup because I'm from Quebec.
Yes.
Born and raised.
Maple.
So syrup's there, right? Yep. It's right there. Yeah.
Okay. Ready?
Yes.
Okay. So horse.
Boots.
Okay. Let's go with Midway.
No way.
No way. Okay.
When I think of Midway, I think of rides, and that's a no way.
It's a no way. Okay.
Yeah.
Chuck.
Wagon.
Good one. Okay. So what about clown?
Terrifying.
Okay. And here's the final one. Let's go with hat.
Need one.
Need one. That's right.
You actually need two. I should preface that. You need two. You need one for corporate nice events that aren't going to, I have a nice hat. It's well shaded when you're at the rodeo. You're good to go. Then you need one if you decide to partake in evening festivities at one of the tents, because it tends to not be the place to bring your nice hat.
Yes.
So I should have said need two.
Well, definitely. I have two hats as well, and some shit kickers. And so I'm all set for the Stampede, but I'm in the wrong darn city and I can't get down there this week, unfortunately. So hopefully you and the rest of the Calgarians are having a good time though this week.
We are. Yeah, it's been great. It's been awesome so far.
Awesome. Well, thanks a lot for being my guest today, Julie. And for those of you who enjoyed this episode, check out our archives over at amplifyyourbusiness.ca. And if you happen to be an entrepreneur who has a great story to tell, there's an application form there so that you can be on a future episode of Amplify Your Business potentially. So please fill that out as well. So thank you again, Julie. Really appreciate you taking the time out of your busy Calgary Stampede schedule. And I'll let you get back to the pancakes and drinking, I guess, right?
Awesome. Thanks so much, Lance. Really appreciate it.
Okay. Giddy up.